This is Chris again, looking at the Monday, July 28th trading session. I have the economic calendar in front of you, and as you see, it's a very light economic calendar for the day. And in fact, nothing until we get to the United States, as the composite PMI comes out, the U.S. Services PMI comes out, both of which had previously come out at 61. Quite frankly, probably not a major market moving event. After all, this is non-farm payroll Friday week, so really the employment picture will be focused more of the focus in the United States. That being said, though, we do have pending home sales, and that can have an effect on the stock markets in the U.S. Look for that to continue to be something to pay attention to. It's listed as medium importance. Really, this is one of those situations where if we get a really bad number, it will affect the market. If it's a fairly benign number, don't look for much. The reaction will be found probably most in the Dow, the S&P 500, and the NASDAQ, all of which look like Friday was a little bit of a rough day, and they may need a little bit of consolidation time before we can finally break out above the barriers that have been holding the market down. Looking at the charts, you can see that the euro dollar has, in fact, gone lower again as we're starting to test the 1.34 level. The real support from a longer-term perspective is at the 1.33 level, so we would anticipate that short-term bounces will probably be selling opportunities. I truly believe that 133 will be tested. Whether or not we can get below there might be a completely different story. I think that the Friday jobs number will probably have more to do with that than anything else. But certainly short-term traders will continue to step in and sell this market going forward. Looking over the pound dollar, you can see that we fell again during the session on Friday, but interestingly enough, in this market, you can make a real case for support all the way down to about 169-ish or so. There's a big cluster here, and we did in fact form a hammer. That's a very bullish sign. So if we can get back above 1.70, more than likely we will head to the 1.72 level, meaning that the buyers should be stepping into the marketplace anytime now. The S&P 500 did fall, gapped a little bit lower, and then fell during the session on Friday. We are still well within the channel. Really, this doesn't mean much other than the fact that we are pulling back, trying to find more momentum to ultimately break out above the 2,000 level. Once we break out over 2,000, that's a very big deal. But in the meantime, it does look like we are going to struggle a little bit here. Probably another day of weakness or so. As long as we can stay above here, not a concern. Probably more or less a non-tradable event. But a supportive candle here along the lines of a hammer or something of that ilk would have me going long, aiming for roughly 2,000, knowing that that will continue to cause problems. And finally, in London, we see that the FTSE fell. Not a big surprise. The European indices in general pulled back. Plenty of choppiness, but certainly we have broken up above enough previous potentially resistive areas that I still feel that this market goes higher. We will still test the 6,900 level given enough time and ultimately break out. Probably going to meander right around the 6780-ish level. In the meantime, pullbacks could warrant short-term buying opportunities, long positions, calls, if you will, of the short-term variety as we continue to kind of just zigzag our way higher. And that has been a look at the July 28th trading session.